Okay, second time's a charm. I think I actually have my audio working this time. I'm just coming in for my trade review for November 7th. This is Thursday. The markets, opened up. A, price action was weak, and I'll go into why I felt that way. But I was down. I'm down 126 on the day. I would call them healthy loss. I didn't go into 700 down for the day. I kind of held it. And so we'll start walking through as we come through. I was on the day. I was looking for somewhat bullish, but not crazy bullish action with the FOMC at 2 o'clock. Uh, the market didn't really react to the unemployment news, pre-market. So I was going to come in and trade a couple of micros on my ES on my top step, and then get a little bit of headway, and then move on to combines and trade combines for a while. I was did go in and was going to trade 3 to 5 micro positions on take profit trader, and the top one I was going to just basically slide it in and do sympathy trades with the rest of them. That one didn't work out so well. But before I go on, let me explain a little bit about something I keep referring to, and that's the market internal screen. The market internals is not something, first off, it's no massive ingenious coding thing here. This is simply 3 tickers that you can pull in and create a quad chart and training view. The bottom right is just price action, price chart. So there's nothing really crazy here. But let me walk through. I think the thing was, let me explain to you how I kind of read this. Before I do, I want to emphasize I trade VWAP, and key levels, opening range breaks, a few mid range, mixed in 21 EMA for additional, weight of the evidence type thing. And it's helped me stay out of some bad trades and get into some good trades. And overall good. I use market internals though. Instead of just going on gut feel of the strength of the market, I've been glancing over at this to try to give me an idea of how strong the market is. So let me walk through this very quickly, and if you want further explanation, contact me, ping me or something, and I'll be happy to walk through this in a video call or something with you if you're interested. So this is how I use it. There's several different strategies. I want to emphasize I do not use market internals as a strategy. I use it as a combination of weight of the evidence type thing to inform my trades, and I'm looking at my levels, my VWAP levels, EMAs, and opening range breaks. I also mix in. You'll see on some of my charts. I do look at yesterday's um, volume, the volume, the value area high, value area low, and point of controls, things like that, overnight highs and lows. Those tend to be areas where price revisits and shifts again. Don't give much credence to overnight trading, but I kind of look. So let's get into this real quick. In the top left, this is the up volume stocks volume minus the down volume stocks volume, and it's kind of like how much money is going into stocks that are trading above yesterday's close versus how much money is going, how much volume is being transacted in stocks that are below yesterday's close price, right? And it's a ratio. And so what I find is as that ratio goes above zero, and you see I have zero in yellow in the middle of the screen, as it goes above zero, the market's starting to bias bullish, okay? What I find is less than about a 1.4, 1.3 below to zero, the bullish runs aren't really that good, aren't really that great. And you could see here today kind of doesn't really have a strong bullish bias, and volume kind of hovered around just above the zero line the whole time. And that should have been a read on that I should have known. When it trends bearish, you'll see bearish up to 5 to 1 and above, and those are good, strong, time to get out the short stick and start shorting futures. The other thing that I like to look at here is, you notice I have the S&P 500, the NYSE to the NASDAQ. The NASDAQ and the NYSE, when they're out of sync, which they were today, the NASDAQ was much more strongly bullish. I'm starting to realize this is my indicator to shift and trade NQ instead of ES. I kind of did it today, although I'm sort of an ES trader, but I'm learning. I'm a convert. Mark Ross will probably be happy to hear that. But anyway, moving on to the top right, this is simply stocks that are advancing. They're advancing minus the instead of volume. Now I'm looking for price advancing versus price declining. Again, referencing yesterday's close. And the thing to point here is, once again, if it's hovering over one area but really not that high above zero, it's probably not that bullish. The trend is probably not going to be that strong. You notice in the morning we got a little bit of a lift, but it didn't continue. Right around 10 o'clock, it kind of fell off, and the bullish run, what I would expect is it would continue up and get into the 1500 to 2000 range. Those are strong trending days. You'll see this chart roll up, or strong downtrending days if it rolls down in the minus 1500, minus 2000 range. That's how I use that section. Again, it's the weight of the evidence. You're looking at all these things together, and then you're going back to your levels and sort of have an idea of what market strength is going to do to influence where price action moves. Bottom left is the most reactive. This is click. Some people use this as a fade. I'm not much of a fader anymore, but if you see tick volume going above 800 or below minus 800, usually that's the end of that strikes the end of whatever momentum in that direction, and then you're going to see a turnaround. You see most of the tick volume goes right inside that range. Again, if you're seeing a real strong momentum and suddenly it's up in the 800, 1000, it's probably a good time to either start looking for an exit key level to exit at, or watching a key level because it probably is going to bounce. And so that's how I look at that. Bottom right is just the price movement, just an ES chart, so I get an idea. So that's how I use market internals. Again, I took this from another chartist, no big deal. Let's get into today's trades. Today's trades weren't that great. Started out with a $40 loss. I was a little nervous going into this, into today. It wasn't really that bullish, and I'm not really looking for aggressive scalping action here right now while I'm trying to recover my accounts. So I was on the break, our break. I typically like to see, okay, let's see a strong close above, maybe a little bit of price extension, then pull back. We didn't really get the price extension. We got the pull back, came down here. We did Dragonfly Doji, signifying a little bit of a turnover. Buyers were taking over again, and as you can see, price rose above 21 EMA. The market strength, the bullish strength, was really weak right there. It was only about 1.2 on volume strength ratio, and so I was really kind of nervous. I wanted to see it get back up and close above. Had this been one of my more aggressive days, I probably would have jumped in right here, and then as it came above, closed above. But it came up met, and so I was really kind of worried about that. I was wanting to see a 5 minute close candle above, or a 1 minute close candle above in this case, but I didn't get it. Got it. So I kind of hesitated, got into the next one, and then it extended a lot further than I wanted to go above the 21 EMA. So after it pulled back, I bought in on the little bit of a pullback here, was riding it up, and got to this candle right here at 10:06, 10:07. It was, again, this really wasn't one of my classic doji candles. There was a bullish body in here, so there was a little bit of a bullish intention on the candle. The other thing that I didn't exit here, the other reason was there was a long lower wick, and a long lower wick's telling me, well, sellers pushed it down, but the buyers turned right around and pushed that right back up again. And so, I hesitated on pulling out. I probably should have at that point in time. I should have taken my small profit and run. Next two candles are strong down. I went ahead and pulled it after it crossed back below the 21 EMA. I didn't let it go all the way down my stop loss. So I started with a small loss on the day across 5 accounts. No big deal. The second one was the one that probably irritated me more than anything else. I was looking for another, on the same idea of, I was really looking for it to go hook up this huge order block at 59.92. I was like, okay, I'm waiting for this next. Oh, it closed strong back above again. I'll jump back in. Then it kind of petered out, and then it turned around and fell back out again. Again, here's where had I just put up with it because the lower pins are above my stop loss. Had I just rode my stop loss in this case, you see my trade idea over here at 1037 worked. I'm not really good. This is something I got to work on, or something I need to be better at. When I get into this choppy price action, I have a hard time seeing my way to my trade realization point. And so anyway, this is my loss for the day. Pardon me. Came back out. I did see that move at the tail end and said, hey, that's a strong move. At this point in time, market volume ratios, my internals was actually getting stronger. It was actually growing. And I'm thinking, okay, maybe this is the takeoff point. So I jumped in. I got back up here, and this was a serious Dragonfly doji. At that point in time, I'm like, that's it. I'm pulling. So I pulled it out. I pulled out and said, that's enough trading on my top steps today. And so I'd cut back in some of my losses. On my take profit trader, this is trying to take advantage of NQ on the side. On the side was where I probably went wrong. So I wasn't really watching this as closely as I should. I did go in as it broke strong above opening range, it's holding. I was watching it, kind of bouncing back and forth. If anybody's a pilot, they teach you understand the concept of instrument scan. You don't just get tunnel vision on one instrument. That's how you get yourself in bad situations. I was trying to instrument scan between the different, and I wasn't doing a very good job. I got to get better at that. I should have pulled it when I saw that huge high wick at 1013 after the strong run up. Sellers were obviously pushing back. You can see at, 1006, 1007, it drove, buyers push it up, sellers stopped it, and then pushed it right back down again. As I approached that, that's probably where I should have just pulled a trade at that point in time. Unfortunately, I wasn't paying close attention. This one ran, and my stop loss stopped me out for a loss. So I was disappointed on that. But then I usually look at a combination screen where it's got the indexes plus crude, because I like to trade. I still got my crude oil screens on. And anyway, I say my crude screens. Yeah, that's right. Sounds right. Anyway, crude had turned around after it came down below opening range low, closed back below, and then pushed hard back up. And I'm like, had I been there and caught it, this would have been one of those classic trades that I love to take, that I know Austin loves, where it's breaking back above opening range low hard, and you just get in and you either trade it to the middle range or you trade it all the way up. Crude was really strong right there. And so I was waiting for a good entry point. I was waiting for it at that point in time. I was like, okay, well, let me see it break above the VWAP and the EMA. And in this particular case, I got my dream setup, which EMA crossed back above VWAP, and I'm like, okay, weight of the evidence here is price is going up, and indeed price went up. And I had my take profit initially right above the top of the range. I was going to I'll just ride it there and then leave a runner, and it was driving up so strong. I stayed 100% in. Then a large order block opened up at 71.75, and so I moved my take profit up to just right at that point. I figured, hey, price will probably go up and pick this off. And as it went up, order blocks kept opening above it, and I was just reaching to move my take profit up again, and my stop loss up, and my take profit hit. Anyway, live and learn. I usually get bit more of not having my take profits in place than I get bit like this, so I'll probably just keep riding the take profits. In this particular case, I won $108 back. Top one is almost not worth talking about. I was riding it, I was fighting this problem in the top step accounts, and didn't get to really pay close enough attention. I did have a break even, and it came down, hit my break even, which is slightly above. So I got a small profit there. Didn't really do any markups today, although I may later on. In general, I'd say I was very happy with today. Not happy I lost $100, but happy that I didn't lose $700 or more. So a good loss, good healthy loss day. Kept in my rules, didn't go on tilt. Overall, very happy.